What's going on, you guys? Dwayne here with my investment journey, and I am back again. In this video, I'm going to be talking to you guys about the fact that I am up $9,000 today in my stock portfolio. The purpose of this particular live stream is just to kind of share with you what happened in my portfolio today, and also to kind of show you the volatility of the stock market. Of course, there's been a lot of videos on YouTube about the stock market is going to crash, so on and so forth, which of course I'm sure it will. Nobody can predict that other than to say the stock market is going to crash. I mean, that's kind of common sense. That does happen ever so often. But today has been quite an interesting day just because my account has bounced back and it's up currently $9,000, over $9,000 right now as of the making of this particular video. This is a live stream, so if you're watching this video right now, feel free to say hello in the comment section because I can see your comments and I'd love to know who's in the building and answer any questions that I can in regards to the stock market. By no means am I a guru or an expert. If I were, my portfolio would be worth a lot more than it is. Okay, so I'm just an average person showing you my journey in regards to the stock market. And so once again, if you have questions or comments, feel free to drop those in the comment section. I'd like the opportunity to try and answer. Also, be sure to give this video a thumbs up. And if you're new to the channel, once again, my name is Dwayne with My Investment Journey. And on this channel, I talk about how to start investing in the stock market and I show you my investment journey. So be sure to subscribe to the channel and click that notification bell so you don't miss a thing. All right, so what I'm going to do right now is I'm going to show you guys currently, I'm going to share my screen with you guys and show you currently my portfolio in regards to the stock market, which as of right now, it's up a little over $9,000. So here's my account with Robinhood, and this is live. This is right now. So it's currently after hours in the market. And as you can see, interestingly enough, when I was making this thumbnail, I was like, well, what should I do? Should I put up $9,000? Because it was like $8,000. And then, of course, it jumped up even to $9,800, which is pretty freaking neat. Apple has done extremely well today, and of course Tesla has bounced back as well. So it is very, very cool, and I'm super duper excited to share this with you guys. I also want to share the fact that the stock market is kind of all over the place, and I'll share with you guys you know, basically what's happened in the last week or so. Even in the last month. Okay, so right here you're looking at the screen and you're seeing my current value of my portfolio. Let me show you guys real quickly Apple and Tesla, just because those two have been major and really more so Apple than Tesla, which is interesting. I'll open a separate link here and show you guys Apple and Tesla's return today. So currently I'm up $9,700. And if I show you guys Apple real quickly here, you'll see that with Apple today alone, today's return with Apple is up $4,900. And that's quite a bit for Apple. It's very exciting, of course, for this to be happening. I've had shares with Apple for over a year, and my total return with Apple is up 36%, which happens to be $29,000. So Apple today for me, because the amount of shares that I have, currently I have 626 shares with Apple. And so for me personally, that's what I experienced today. I was very aggressive with Apple. I think I probably have almost $70,000. For simple math, let's say it's $70,000 that I had invested with Apple. So this was back in 2020 when they did a split in August. I can show you guys that right here just to kind of be a little transparent. I'm excited about Apple because, of course, you know, there's rumors about them coming out with the Apple car, an electric vehicle at some point, hopefully pretty soon. You know, I think by 2025, which is clearly down the road. So as you can see here, there's a market buy on September the 10th for $9,000 with Apple. I'm not going to really talk about the other ones because I want to show you guys the major purchases that I made with Apple. So a $9,000 buy. Let me click on orders real quick. Okay, because that'll make it a lot easier. Okay, so with Apple on August 31st, they split that day 2020, August 31st, 2020. I invested $59,000 here, as you guys can see. Let me do the math on it real quick to find out how much. So we got 54,990.90. Then we have another 6,780.74. I'm not going to add the smaller chunks, plus another 7,437.94. So I'm at $69,000 right there. So initially it was $69,000 that I really kind of invested with Apple. And then of course, September 10th, the one up here at the top of the screen, I invested another $9,000. Now that's September the 10th, 2021. So altogether, I have roughly about $78,000 invested with Apple. So it's pretty freaking exciting. Okay. So that's kind of what's going on with my position with Apple. And like I said, today alone, Apple has gone up for me almost $5,000. I'll show you guys currently what's going on in my portfolio. All right. So today, once again, the return is, and it's gone down since I started the video, but the return today alone is $4,882. It's currently in after hours, so it's still quite active. And then Tesla, for me today, my return in regards to Tesla today is up $3,429. My overall return with Tesla is up 114%. So I've basically made more money than I invested with Tesla, which was like $34,000 or so. And so as you guys can see, I'm up $39,000 with Tesla. Now, of course, it's always kind of cool to show you guys what's going on now. Okay, so even since the start of the video, right? When I started the video, I was up like $9,800 today. And so there you guys saw that on the screen. So the screen changed from, 8,500 and change back up to $9,800 today alone. That's really cool, and a lot of people that may be watching like this video for the first time, you guys are seeing this portfolio and you're seeing, oh, there's so much money in this account, and there is at this moment. However, I like to always share and show you guys that my all-time experience in regards to the stock market has not been very smooth. So I started investing way back over here in 2016, and I really invested maybe like $4,400 or maybe like $4,500 or so. And so as you guys can see, underneath the $241,000, you can see that I was down negative $4,399.74. So I was really down like almost $4,400, and I had just kind of given up because I didn't know what the hell I was doing. And I was like, you know what, F it. So I didn't do anything in the stock market from, let's say June 2017. So nothing took place. And then May of 2020, I have invested, since May of 2020, I have invested $241,845, as you guys can see there. And then, of course, you can see based on the graph my experience. This is the thing right here. At this particular point, October 30th, 2020, I was down $63,000. And trust me, that was not a good feeling. So a lot of you guys may be seeing, oh, I'm up so much right now. But initially, you can see that my experience has been all over the place. So based on my investments since May of 2020, I am up right now about $45,000. But overall, since I started with Robinhood, you can see my return is right here, plus $40,000. Okay. But once again, since May of 2020, I'm basically up like $44,000 overall, which I'm very happy. Even if you look at the most recent, right? So you see my portfolio here starting, November the 6th. Okay. Today's date is December the 7th. So since November the 6th, as you guys can see, my portfolio has been all over the place. So we have November the 6th, I was at 285. And then you can see here, I was on November the 15th, I was at 270. So down 15 G's. Then, of course, back up here, as you guys can see, up, $11,000, and then down again, and then back up again, and then down again here. You guys can see I was down to like 273, and then today you can see I'm up basically at 286 right now. So this is a very realistic view of the stock market. Now, it does look super impressive because I do have selected one Y right here, which means the last year, and it shows you that my return is 34.99%, which for me is $74,000. And I don't think this will be the norm moving forward because a lot of this has to do with rebounding in regards to the coronavirus. So that's not an accurate depiction of what somebody can expect in regards to the stock market. But I like to show you guys this because this is what it's going to be like investing in the stock market. I mean, you could see my freaking portfolio was all over the place, right? So you can see as I scroll here, it's all over the place. We had a high back here in January of 2021, and then way over here we had a low in March 2021. So it's all over the place. But the thing is, you want to be consistent, and you want to choose solid stocks. Once again, I never pretend to be a guru or an expert or anything like that when it comes to the stock market. And that's why I named the channel My Investment Journey, because I do want to show you my journey. I also want to take the time to encourage you guys that you don't need to wait for it to be ideal for you to invest in the stock market. Okay. If you're watching this video and you're doing research on YouTube, you definitely need to just jump in. And I don't mean jump in without doing research. I just mean don't get into, analysis paralysis or paralysis analysis, whatever it is, however it goes, right? You just want to get started. And some of the best stocks to invest in would be solid companies that if you think to yourself, is this company going to go bankrupt? I don't think Apple's going to go bankrupt in my lifetime. I'm 43 years old. I don't think they're going to go bankrupt in my lifetime. I don't think Walmart or Coca-Cola or Pepsi or Dr. Pepper or McDonald's, you know what I'm saying? I don't think those companies are going to go bankrupt anytime soon or ever, because people love their food, people love their sodas, you know what I'm saying? So I encourage you to do your research. And if you are a total newbie and you don't know anything at all in regards to the stock market, one of the best things that you could do is research ETFs, okay? Exchange traded funds. You could just get on YouTube and type in what is an ETF? And you can even type in what is the best ETF to invest. And once you do that, you're going to go down this rabbit hole of watching videos, and people are going to be giving you their advice or their experiences. And ETFs are a little more safe than investing directly with only one company. However, I found that it's worked for me. The fact that I decided to be so aggressive in regards to Apple and be so aggressive in regards to Tesla. Apple and Tesla are a big chunk of my overall portfolio. If I show you guys the percentage of my portfolio, so on the screen right here, this is Apple. So my portfolio diversification in regards to my portfolio, 37% of my portfolio is with Apple. Okay, 37%. And then in regards to Tesla, 25% is with Tesla. So we have 37% and 25%. So that's 62%. Now, one of the things that I think is very interesting, and I do drive Uber, by the way. Some of you guys probably don't know that. But one of the things I found interesting, I picked up this guy the other day, and I picked him up from a really nice house, probably, $1 million, if not $1 million, close to $1 million, right? Very nice neighborhood, very nice house. And, I said, hey, man, I'm very curious. You seem like someone who's successful. You made some good decisions financially. I'm kind of curious what you did as far as investing. And he turned out to be a financial guy. So that was kind of cool. And he said, you know what? One of the things that a lot of people don't talk about, and rich people don't tell you this, is that they really kind of put all their eggs in one basket. And it kind of blew my mind when he said that, because I was like, wait, what? And he's like, yeah, like they really are hyper focused on one thing. And I thought that's quite interesting because I find myself time to time thinking about, should I have been more aggressive with Tesla? Should I put more money even still now into Tesla? Because Tesla, between Apple and Tesla has given me a bigger return, and I have less money invested with Tesla. I mean, my Tesla return is up like 110%, while Apple is up, 30 something percent, not 30 something, like 20. Let's just show you. Let's show you and double check at the same time. So currently my returns with Apple, as you can see here, is 35%, okay, which is a $27,000 return. Now my return with Tesla, I'm up 114%, which is $39,000. Okay, so currently you see my market value in regards to Tesla is $74,000, and then my market value in regards to Apple is $107,000. Now, clearly, if I had more money invested with Tesla, or if I had just switched the amounts, right, with the different companies, the portfolio would even be up higher. And I can't complain. I mean, it's been an incredible journey to be able to kind of dig myself out of that hole. It hadn't been a great experience. I mean, to be down $63,000, I found myself like really saying to myself, okay, so should I lick my wounds again like I did in 2016, 2017 when I lost $4,300, basically $4,400? Should I just lick my wounds and say, all right, you're down negative $63,000. It's time to pack it in, right? I decided, you know what? I really want to figure this out, and I really want to stay patient. When I was down the negative $63,000, I was really trying to be a day trader and a swing trader, and I still kind of dabble with that a little bit on my Webull account, but I'm kind of shying away from that just because it hasn't done well by me. One of the things that's interesting about the stock market for me, because I'm always thinking, is I'm thinking, okay, am I making the right decision? Should I do more of this and less of this? Because I have in my portfolio, a lot of people kind of preach about being diversified, having a diversified portfolio. And I think my portfolio is okay. Of course, everyone else will have their opinion because everybody is a pro, everybody's a guru. Even people that don't have this much money invested in the stock market, they're a guru. They know more than I do. And they probably do, right? But there's a difference between knowing and not taking action and actually taking action. And that's very important. It's almost irrelevant to have the information if you don't apply it. Applied knowledge is way more powerful than just knowledge itself. Right? First, you have to have the knowledge. I get that, right? So continuously research, okay? But more importantly is you have to apply it, right? You have to be willing to pull the trigger and actually invest. So, the purpose of the video is just to kind of really show, yes, this is where I am currently in regards to my journey. And I'm going to be doing more of these videos, even when I'm not in the green, right? So like today, my portfolio, when I started the video, was up, $9,000. And I guess it still is right now, currently, because it's the after hours right now. So currently, you guys can see the screen, currently up, $9,764. But this is today. So this is today's journey, right? So back, let's see, the stock market for me here in Houston, Central Time Zone, opens at 8:30. Okay, so back at 8:30 this morning, my account was at 282. Now, of course, there were some things that transpired. Clearly, you can see here, 2 a.m. in the morning, my account was at 276. Okay, so that's 2 a.m. in the morning, and then you fast forward to 8:30. When the stock market actually opens, right? And I'm at 282. So I went from 276 to 282. And then, of course, you see the journey after that. I was up back here to 285. And then right now, I'm at 286, 738. For the last week, my account is actually down $792 for the last week. You guys can see that right there. So even the last week, you can see the volatility, right? So November the 30th here, I was up, December the 1st, $290 that was exciting, right? And then of course you see the account was down, and then even way down here, 273. And this is just in a week's time. It's had that much of a swing. The last month, I'm up 5,000, almost, $5,700 the last month. The last 3 months, which is incredible, I'm up $38,000. A lot of that had to do with Tesla and Apple. It's crazy, $38,000 in 3 months. Like, that's huge. And then of course in the last year, you guys can see I'm up 74,000, and then all time on Robinhood, I'm up $40,000. I'm very happy with that, just because these moments over here, I was just down. Like, you know what I'm saying? I'm down 50,000, I'm down 20,000, 40,000, 63,000. And then eventually, looking at it now, it's like, oh, okay, cool. It's a slow journey type of thing, but it was interesting. It's still nerve-wracking sometimes. But when it comes to the stock market, I know that I'm going to be an investor that, holds for the most part. I'm going to hold and I'm going to pay attention. Now, I'm not going to freak out. As a matter of fact, Tesla yesterday, Monday, Tesla was down to like $973. And on my Webull account, I have some shares with Tesla, and my average cost is $1,026. And I'm looking at it. I have $8,000 just sitting in the Webull account doing nothing. And I'm looking at it like, yo, you should grab some more shares of Tesla on your Webull account, because your average cost per share is $1,023. And I'll show you guys, just to kind of keep it transparent with you guys here. Show you my Webull account. Okay, so you're looking at Tesla. Okay, so as you guys can see, eventually, all right, over here, over here, you see my average cost. Right now, Tesla is $1,057. Okay, and then my average cost is $1,026. Tesla had gone down to $973. And so I should have taken that opportunity to grab some more shares, but I didn't. I was scared. Overall on my Webull account, my journey has been kind of all over the place. Right now, I'm currently up overall $5,796. But there was a point there on the graph where I was almost up. I was up over $10,000. Okay, so you can see kind of my journey in regards to Webull, and I was kind of doing some like swing trading, day trading, and I said, well, I probably need to chill with that and just kind of be more patient. I really appreciate you guys watching this video. Be sure to smash the thumbs up in this video. This is a live stream, so if you have any questions or comments, please feel free to leave them in the comment section. Once again, the purpose of this live stream is just to kind of share, not only that I'm up right now, but that the market is very volatile. And I know, like, when you first get started, it could be, you can have some anxiety in regards to the stock market. If you're new and you're just getting started, I would say stick with companies that are solid, that you absolutely know and feel confident investing, instead of falling for the trap of investing in companies that the stock price is lower. So you're like, ooh, I can get more shares. The stock price is like $5. I can buy 1,000 shares by spending $5,000, right? And of course, your return will be greater, right? If it went up, $1, your return is going to be pretty good. But the problem with that is that those stocks probably aren't going to go up a whole dollar, and it's just nerve-wracking. It's better to invest with solid companies and sit still and hold that, like tell yourself, you know what I'm going to do? I'm going to invest $500 in Tesla and see where I'm at a year from now. And even though $500 is not being aggressive, and I would suggest like be aggressive, even though $500 is not being aggressive, you just need to take action. I mean, we have all probably wasted $500 on some gadget or something or things. If you think about the last 6 months, I'm sure in the last 6 months, we've probably wasted $500 on some stupid habit or just something meaningless. So if you decided to invest $500 with Tesla, and kind of say, all right, let me see what happens in the next 6 months with this $500 investment in regards to Tesla or Apple. When you invest in the beginning and you have a smaller amount of money, the swings aren't that big. It's the same type of swing, but the thing is, if you're investing $1,000, that's going to be a different experience than if you're investing 10,000, than if you were investing 100,000. Okay, so when you have a 2% swing and you're investing $1,000, that's not going to hurt your feelings as much. But if you're investing $100,000 and you have a 2% swing, you're gonna be like, you know what I'm saying? Like you're not gonna like that. You're not gonna like the feeling, and that's why you should invest in solid companies and be confident and know that the stock market is going to rebound. The stock price will rebound, whether it's going to be in the next month or months or year. Okay. When I look back on the purchases that I've made in Robinhood, in my account back in 2016, when I had no clue what the hell I was doing, some of the solid companies that I invested in back in 2016, I would have been sitting real nice right now had I just been patient and had the long-term approach in regards to investing. A lot of people are kind of in love with the day trading type of investing, the swing trading type of investing, and don't fall victim to these videos. When somebody says, I made, like, I could have titled the video, I made $9,000 today in the stock market. I mean, technically I didn't really make it per se because I didn't sell my shares, right? And so if you're trying to day trade or swing trade, it can be interesting because let's say I sold all my shares and I was up literally $9,000 today. Well, then tomorrow or next week or next month, when I decide to jump back in to whatever stock or stocks, okay, I could easily lose more than $9,000 in that particular day. So it's quite interesting. The stock market is very interesting because I know that somebody can take my account right now, right, with the portfolio, $280,000. Somebody can take that account right now and turn that into millions in a couple of months, But I don't have that information. I don't know that I have the courage, the balls to learn how to do that because it's hard to decide to learn something new when there was a point where I was down negative $63,000. So it's quite interesting. Based on the experiences that you have in the market, kind of dictates how you are in regards to investing. So like now I'm like, no, I still want the training wheels on. I don't want to, be super aggressive. If I had, I don't know, maybe if I had $1 million and I would say to myself, okay, you know what? I'm going to play with $200,000. Maybe I would say I'm going to buy $200,000 worth of shares right now with Tesla because right now, Tesla is not necessarily down, but Tesla was almost $1,200 not that long ago. So right now it's, like $1,053 right now. So I could be very aggressive because I feel like Tesla's going to get back up to like $1,200 or $1,100 pretty soon here, right? So I could take a bigger risk if I had more courage, bigger balls. I could just be aggressive. But with my portfolio right now, I'm not quite there because like I said, it's going to be a bigger swing. It's going to be a bigger gain or loss when you have more money. If you're investing with $200,000 and you have a 3% swing, right? So like even today, let me show you guys how much percentage wise. Yeah, right now. So right now, percentage wise, you can see for today, right now, it's a 3.44% today. And so 3.44% today is plus $9,500, right? That's a 3.44 swing. Now, a 3.44 swing for $1,000 is nothing. You know what I'm saying? It literally is like $30, right? Let me double check my math there. 3.44 for oh my God. For $1,000, that would be $34.40. Okay, so it doesn't seem like that big of a deal when you're investing less money, and that doesn't mean that you guys shouldn't be aggressive, because a win is a win is a win is a win. You know what I'm saying? If you're investing $1,000 and your portfolio is up 10%, even though 10% is only $100, right? Technically, if you were investing more money, it would be up more than $100. So it's still a win, and you still should value that and not say, well, I've only made $100. You know, my return's 10%. I've only made $100. If you put $1,000 in the bank and let it sit there, you know what I'm saying, for a year, you're not going to make $100 on that $1,000, especially now the interest that they have in regards to like money market accounts or savings account, nowhere close. You will not get 10%. You will not make $100 on $1,000. You know, so that's definitely food for thought. I'm going to jump into the comment section here because I've been talking it up quite a bit. I appreciate you guys watching. Once again, please smash the thumbs up if you haven't already. If you're new to the channel, be sure to subscribe. You know, I'd love to have you as a subscriber, help grow this community, help grow this channel, and kind of help get this information out in front of more people, because that's the purpose of this particular channel, right? Yes, I'm having a good experience now with the stock market, but I also want to always take the time to show people the real, right? And the real was, your boy was down 63 G's. My student loans are like $55,000 right now. And when I was down negative $63,000, I was like, yo, you should have just paid your student loans, man. You know what I'm saying? Because, yeah, that would have been a better use of the 63 that you're currently down. But it was never appealing to pay off the student loans. And of course, different people have different school of thoughts in regards to, you know, what you should be doing, you know, like pay off all your debt, you know, so on and so forth. It's just not as appealing. I'd rather just, you know, pay a little bit over the next 9-10 years than to say, all right, cool, I'm debt free. I feel so good. I don't know that I'm going to feel so good to be debt free if I took, you know, a big lump sum of money and paid off, you know, like let's say I paid off my car and I paid off my student loans. I don't know that I'm going to feel super great about that. And I'm not really going to be saving that much money. You know, like even on my car loan that I have right now, my interest rate's 2.49%. And so for the life of that loan, you know, I'm paying like an extra $2,400, $2,500. I think that's worth it. We're talking about the next 6 years, right? Yes, I'll be paying for 6 years if I take the time to drag it out, but saving $2,500 over a 6-year period is not as appealing to me as investing. You know what I'm saying? Like if I were investing the amount that I owe on my car, I'm going to make way more investing over the next 6 years than I would to say that I paid off my car loan and I saved $2,500. Like that's just not appealing to me, but that's me personally. All right, let me jump into the chat here. We got Tamara in the house. Thank you so much for stopping by. I appreciate you very much. We got Points Blank Finance, my brother from another mother. This is Rod. He has his own YouTube channel talking about how to invest in the stock market as well. And the channel name is Points Blank Finance. Be sure to go to his channel and subscribe, support his channel. Rod says, what's up, D? Surprise live stream. Congrats on the 9,000 increase today. Good to see you, bro. Yes, my brother. Likewise. Always good to see you. We got Cal B in the house says Apple isn't really a growth stock. Can't really compare the two. Yeah, I mean, with a grain of salt. Cal, it's interesting that you're saying Apple's not really a growth stock, but it really is a growth stock. It's definitely not a big dividend paying stock. You know what I'm saying? Yes, they do pay dividends, but people aren't investing with Apple because they're like, the dividend payments are really good. You know what I'm saying? So to kind of demonstrate my point, Cal, though, I'll show you in the last 5 years, and you're right, you can't compare the two, right? You really can't compare Apple and Tesla. But in the last 5 years, as of today, right now in this moment, you can see that in the last 5 years, Apple's return is up 528%. Okay, so yes, of course, if I show you Tesla's last 5 years, it's going to be ridiculously different. In the last 5 years, Tesla is up 2,700%. Okay, yes, you're absolutely right, but Tesla is the extreme. they're still, in my mind, both of them are growth stocks. Now, Tesla does not pay any dividends at all. So Tesla's main purpose from people, when people invest, is that they're hoping that it will grow. There's no dividend payments at all. However, what I will say is, if you had $1,000 invested with Apple 5 years ago, and you see Apple's return once again right here is 528%. So $5,000 invested with Apple, $1,000 invested with Apple 5 years ago, okay, and a 528% increase, that would actually be $6,280, right? Because you have $1,000. 100% of $1,000 would be $2,000. Another 100% would be $3,000, and so 500% would be $6,280 right now if you let $1,000 sit with Apple. You just invested $1,000, however many shares that would have gotten you, right? That would have been worth $6,280 right now. Now, of course, if you compare that with Tesla, clearly your $1,000 investment would be a whole lot of money right now with Tesla. So I hear what you're saying in regards to like Apple's not really a growth stock, but it definitely has grown, and it does grow. It's just not, you can't compare Apple and Tesla. You just can't, because people are more excited about Tesla. There's more hype around Tesla than there is with Apple. Apple's, just I guess, more boring type of investment. Between the two, there is not as much movement with Apple as there is with Tesla. So I feel what you're saying, though. Angela, thank you so much for stopping by. I appreciate the support on this channel. I love when I see other people from my other channel coming here supporting this channel. I really appreciate you guys. Angela says, hey, Dwayne, I'm happy with Apple. Awesome. Me too. We got James Hatchett in the building. James, what's going on, my bro, from my other channel as well. James says, what's up, Dwayne? Real talk. Oh, man, I really appreciate you stopping by the video, my bro. Then we have Just a Tiger Thing in the house, says, yo, what's up? What's going on, bro? Thank you so much for stopping by and supporting this video and this channel as well. We have Miss Gatlin in the building. How you doing, lady? Thank you so much for stopping by this channel. I appreciate you so much. I hope you guys are doing well. Just a Tiger Thing says, Dwayne, I notice sometimes you say something like X stock is down, and that's okay because my dividends are buying more. So that means you're a dividend investor? Like, do you only care about dividends? No, I definitely would not say that I'm only a dividend investor. I do have several accounts. I have more accounts that pay dividends than I do accounts that don't pay dividends. As a matter of fact, Tesla is the only position that I have that don't pay dividends. Okay, everything else, company-wise, as far as a single company, pays dividends. And then, of course, I have VYM, which is a Vanguard ETF. It's a high-yield ETF. Then I have VGT, which is a Vanguard ETF, which is a information technology ETF. And then I have VUG, which is a growth ETF with Vanguard. And all of those ETFs, including, those three ETFs, do pay dividends as well. Now, of course, it's not some big time dividend paying account, but they do pay some dividends, and I think that that's important. So no, I'm not really only a dividend investor, but what I will say is my portfolio would not have grown crazy the way that it has if it wasn't for Tesla and Apple. Tesla and Apple has been absolutely incredible. If I look at how much money that I've made just because of Tesla and Apple, like I've made over almost $70,000 just because of those two companies. So if I wasn't thinking about something other than dividend investing, I would have missed out. And that's kind of where I was when I started my investing journey. I was really not feeling Apple or Tesla just because they were bigger companies, and I was really caught up on like, I need to buy more shares. If I can buy, in the beginning, I was buying like 10,000 shares with, a specific company and looking for like a 30-cent swing. I'll take my 3Gs and run for the hills, right? And so, yes, sometimes I did hit and sometimes I did miss. But once again, deciding to let go of that type of thinking in regards to the stock market made it a little bit easier, and there's less anxiety and fear for me just because I know that Apple is a solid company. And once again, I don't think they're going to go bankrupt, right? In my lifetime. Tesla, I think Tesla's going to continue to grow the way that it has been. Clearly, it's not going to grow at the same rate, right? So in the next 5 years, Tesla is not going to be up 2,700% in the next 5 years. Just, but I'll take 1,000% in the next 5 years. I'll take that. That's pretty cool. You know what I'm saying? So, yeah. Let's see here. Just the Tiger Thing says, do you not care about being up? Just generating income from your investments. Of course, once again, I'm definitely generating income from my investments. I mean, that's just part of it. And that's what's going to be very cool, like documenting my journey with you guys is going to be cool to show where I will be, 10, 20, 15, 10, 15, 20 years from now. Since I started the channel, my portfolio is currently over $100,000 since I started the channel, right? So if I show you guys can see on YouTube my the logo, basically, my little picture icon is a picture of my Robinhood account. So like if I show you guys that, you can see my Robinhood account when I started this channel. My portfolio value was at $163,000. That's where my portfolio was when I started my account, when I started this particular channel. And so I'll show you guys that real quickly here. Well, maybe not real quickly because I'm struggling. Give me 1 second here. Let me figure it out. Wait a minute. Where's my thing? Where's my share my screen button? Here we go. Here's my screen. Okay. So right here, you guys can see where the mouse is, right? My portfolio was valued at $163,000. It said investing $163,000. You can't see very well, but that's what it is, okay? And at that particular time, I really had invested, $241,000 in my account. But that's where the portfolio was when I started the channel, and today I'm, clearly plus $100,000 since starting this channel. And I did that. I made that the image, my profile pic for this account. I made it that on purpose because I wanted to kind of timestamp where my account was when I started the channel. And I think that's really, really dope. I mean, I'm up $120,000. As of right now, I'm up $123,000 since I took that picture on my Robinhood portfolio. Okay, and once again, I have not really invested more money. Okay, so it's not like, oh, I invested way more money, and so that's why my portfolio is up. No, I was down that much money, to be honest with you. Let's see here. Just the Tiger Thing says, I plan on being a dividend investor once my dividends become more than I can contribute. No point in contributing $300 to $500 a month if my dividends pay $1,000. This guy, bro, you killing me. That boy said he's balls deep in 100%. TQQQ made $1,000 today in unrealized gains. I don't know. I don't even know TQQQ. Actually, I can look it up real quickly on my phone. Just because I'm curious. There's so many different ways to be successful in the stock market, for sure. Okay, so wow, TQQQ is up today, $13. All right, interesting. Okay, wow, in the last 5 years, they're up 1,500%. I definitely, once again, don't really know a lot about this particular I guess this is like an ETF. There's 127 accounts. There's 127 companies in this particular holding, which is kind of cool. This is neat. I definitely will kind of have a look at this because the returns have been crazy. Appreciate you sharing that information, Just the Tiger Thing. I appreciate you, bro. Like I said, there's definitely more than one way to skin the cat in regards to being successful in the stock market, and I definitely appreciate that. I never at any moment will pretend to be a know-it-all because I don't. Like I said, somebody could take this exact same portfolio that I have and make millions with it in a short time. Adrian, what's going on, my bro? Adrian says, what up, Dwayne? Yes, sir. He says, options, Dwayne, if you learn, you can make really good money. Of course, bro. If that's the thing is if, and I don't know that I have the patience and the time. I probably should have a more serious look into learning more about options, but it's just it's not appealing just because, it's something new. I'm not always like, yo, let me learn something new, especially when it comes to money and investing. I have PTSD, man. I'm not really trying to lose money like that the way that I did before again. Adrian says you can just invest like 10% of your port in long options. Just a Tiger Thing says I definitely smashed that like button. Thanks, bro. I appreciate the support for sure. Cal B says, how about selling options? I think that's definitely more less risky. You think it's more less risky? It says definitely will help the portfolio grow faster. And then, of course, you have in there covered calls, put credit spreads. Listen, all these things I don't know much about. There really aren't a lot of videos on YouTube that really go step by step in regards to options, and I don't know, man. I know that I've thought about like I should consider learning it, and maybe in the future I will, but I'm so content with where I am. Like I cannot complain regarding the experience I've had thus far in regards to the stock market. Like I'm doing pretty all right, so yeah, we'll see. If I decide to do that, you guys will be the first to know. Yeah, Just a Tiger Thing says not everybody's comfortable with options. That's true. Angela says yes, indeed. Yes, ma'am. Dazzy says I'm back up $280 on my $7,000 portfolio. Congrats on the $9,000. I'm in Ireland. Dazzy, wow, thanks for letting me know from where you're watching the video, bro. I love YouTube. Like the internet is such a powerful tool. You're watching from Ireland, and congratulations to you on being up $280 on your $7,000 portfolio. It can seem like that's not a big deal, but it really is a big deal. I mean, the only difference is that, you have a little less money. It would be a bigger gain if you had more money, right? If you had $70,000, that return would be more than $280, right? So definitely want to celebrate that, and that's cool. I really appreciate you taking the time to share that. Cal B says Apple is a value stock. Indeed, agreed. Just a Tiger Thing says I'm 21 and I got currently 25,000 investing, hoping I can aggressively invest to 1,000. I guess you mean 100,000, and then letting the snowball effect go from there. First of all, congratulations on being aggressive and knowing the information that you know at 21. I mean, clearly, if I had known this at 21, I would be sitting real pretty at 43. So that's exciting for you. I'm excited for you and your journey for sure. Cal B says put the 25,000 into Tesla. Now that's not a bad idea for sure. That's definitely not a bad idea. Just a Tiger Thing says I wouldn't recommend leverage ETFs for most people. The recent dip turned the 3% dip into a 13 to 15%. Once again, I'm not interested in learning new things per se in regards to certain things such as this TQQQ. Just because I don't know. I'm doing good. If it's not broke, don't fix it. It's not like I'm in a hurry, like I need to be a millionaire tomorrow. I'm cool. Let me take my 10 to 20 years to become a millionaire or whatever. That's okay with me as long as I get there. And I feel like, just investing in the stock market is going to enable me to get there sooner than if I were just saving my money. Right. So I'm not necessarily worried about that. Just a Tiger Thing says, made it hurt to look at my portfolio. I bet it did. David Watson, what's going on, bro? Thanks for stopping by the channel. Says ET is down. What are your thoughts on someone trying to get in? ET, is that the ticker symbol? I don't know what you're talking about. Let me see if I can look it up here on my phone. Energy Transfer? Is that who you're talking about? Well, first of all, I definitely have this on my watch list. They're definitely on my watch list, and the dividend yield is pretty freaking nice. And according to the 17 analysts, like right now, it's a 94% buy. It's definitely way down. As far as giving advice, like, oh yeah, you should definitely buy I mean, I'm never that guy. I'm definitely never that guy. But I'm glad you brought that to my attention because yeah, the price is definitely down right now, and I think that would be something decent to consider. For the last 5 years, they're actually been down overall 50%. Um, I don't know, man. I mean, I'm kind of torn, but right now, like I said, there's 17 analysts rating that's saying this is a 94% buy. I don't really know, how much we should kind of care about that, but it's there. Bob says, I dropped 12 G's into VGT because of you. Cool, Bob. Well, I hope you're having a decent experience. I know for me personally, if it wasn't for my homeboy Points Blank Finance, his name is Rod. He has a YouTube channel, Points Blank Finance. If it wasn't for him, I wouldn't have jumped into VGT or VUG. So here's this channel right here, Points Blank Finance. You can go check him out. Like I said, I hope you're having a good experience with that. In regards to VGT, Bob. That's so funny. Listen, I appreciate you guys so much for stopping by this video. I gotta run because I gotta go to my daughter's concert tonight, and so I gotta take a shower and shave and get real clean. But I did want to take the time to share this video with you guys and kind of share kind of where I was in regards to the stock market. I'll even show currently where my portfolio is right now. The market is currently closed, and right now my portfolio is up $9,226. I think when I started the video, it was like $9,800 and something dollars. So it's even kind of dipped a little bit, but that's okay. I mean, I'm sure tomorrow it'll go down. And the scary part is that Tesla is not even it's not even up where it was like basically last week or a couple of weeks before, when it was like it was like $1,100. So Tesla's not even up. So I'm kind of looking forward if I can get Apple and Tesla to kind of be up the way that they are right now. At the same time, that's going to be a very, very good look. Let's see here. Just the Tiger Thing says, I feel like working till you're dead is a scam. People are afraid to take reasonable risk and shy away from anything volatile or risky. Yeah, well, I think a lot of it has to do with just lack of information, right? Even if they taught this stuff in school, right? Let's say they taught you this stuff in high school. Being exposed to something doesn't mean you're going to execute. Having the information shown to you or taught to you doesn't mean that you're going to pull the trigger and say, all right, I'm going to be aggressive and I'm going to do X, Y, Z. So it's interesting that like they don't inform people anyway, because more than half of the average person would never invest anyway. Right. So, I think, part of it is it's necessary to kind of have people work until they're dead type of thing. Because, we need a lot of worker bees to keep this thing moving. That's just what it is. And so in a way, why would they want to tell you? It's not like people that are rich are sharing how they became rich, or like even if they inherited some money and they've invested it, they don't share what they're doing and what they've done or what their grandparents or great grandparents have done to put them in the position that they're in right now. So I hear you. You also said, I use my age, my time horizon, and risk tolerance to be comfortable with leverage. I don't want to go far deep into it though. Yeah, I mean, dude, time is definitely on your side. I mean, 21, God bless America. Points Blank Travel says, oh man, D, thanks for the love. I appreciate everything you do, bro. Yeah, you already know. I mean, I gotta be honest and transparent with the people. I don't want to come across and seem like I'm a know-it-all. If it wasn't for you talking about VGT and VUG, you know what I'm saying, I wouldn't have been. I mean, and you told me about VGT, and I threw 26 G's right away. I was being so aggressive. And so like now I'm like, all right, I want to sit back a little bit. Maybe I should stop pouring so much money into the market. Maybe I should be just stacking some money in case, there's a major crash and I see a great opportunity to take advantage of that, because like if there's a major crash, right now I don't have the type of money that I want to, have to throw into it to really kind of take advantage of a major crash to grab some more shares of companies or ETFs that I know are solid and that are going to bounce back. So yeah, I definitely got to, thank the person that put it on my table, put it on my radar. Just the Tiger Thing says, everybody is spending and saving aggressively. I'm investing aggressively. Well, I don't know if people are saving aggressively. I know that they're spending aggressively. And so, once again, I'm impressed, man, to be 21 years old and to be that much in the know and to want to learn about this type of stuff and not only learn about it, but take action. Kudos to you. Adrian says, I want to do a super bet on SPY options tomorrow. Let's see what happens. Well, hey, man, listen, do your thing, bro. Just the Tiger Thing says, once I want to exit my position, I'm going to sell out with covered calls and let it ride. But once the covered calls get exercised, I'll move into VOO. There we go. VOO is definitely a great ETF. It's definitely a safer ETF. I don't have any position. I don't have any shares with VOO because I'm into VGT and VUG. And the reason why I didn't get into VOO is just because I'm like, the returns haven't necessarily been that great. I mean, of course, the S&P 500 has done its thing for years and the returns, been pretty consistent. But I just wanted to be more aggressive. It's not like I have, the next 40 years, I mean, hopefully I have another 40 years, right? But, when I'm 83, like, what am I going to do with all that money, right? Like, it's going to be passed down to my kids. So, of course, I want to be a little bit more aggressive now, even though, the experts would say that's the opposite. I should be, more conservative now. But, man, I'm trying to get there. Let's see. Just the Tiger Thing says, major crash is everything is on sale. Yeah, I mean, like I said, I wish I knew what I was doing when I started back in May of 2020, because yeah, my portfolio would probably be like $500,000 right now. But that's life. I mean, hindsight's always 2020. Adrian says, you can use some margin, Dwayne. I definitely. Oh, you're talking about in regards to a crash? Yeah, I definitely, that's on the forefront of my mind. I have crazy access to margin on Robinhood because my portfolio is valued so much. I could definitely get a crap ton of money in regards to margin. Thanks for saying that, because of course I was thinking about that today. I'm always thinking, and so that's a very, very good point. I don't necessarily need to have my own cash. If I want to be risky and do margin, I could do that. Just the Tiger Thing says, people think in order to be rich, you have to save money. Yeah, they do. It's really disheartening seeing people save thinking they'll come out in the end. They'll come out on top, I guess, in the end. Honestly, I think people should be more aggressive. I'm a huge believer in that notion that concentration builds wealth and diversification preserves wealth. Yeah, and that's exactly kind of what I alluded to in the beginning of the video when I was talking about the one guy that I had in Uber. Right? Like, he was saying that like rich people are hyper focused and kind of put all their eggs in one basket. And that's a really good way, that the way that you said concentration builds wealth and diversification preserves it. That's exactly what he's saying. Once you have amassed, the money, then you diversify to kind of keep it safe. And that's right. So of course, with my time horizon and little money, I can use it to go further. Using margin sounds scary. Imagine owing money. Yeah, I mean, of course, margin is not insanely appealing to me. Like, I have access to it right now. You know what I'm saying? But I just don't have that much courage. You know what I'm saying? Like, I feel like it's a no-brainer to like use margin right now in regards to Tesla, but I wouldn't do it. You know what I'm saying? I'm not trying to pay, and I'm not trying to be in a messed up situation if it doesn't go the way that I want it to. All right. Anyway, guys, I got to run. I got to shave and shower, and get to this concert for my daughter later on tonight. I appreciate you guys watching so much. If you haven't smashed the thumbs up, be sure to smash it. If you're not subscribed to the channel, be sure to subscribe. All right. Once again, my name is Dwayne with My Investment Journey, and I approve this video. I'll see you in the next video. Until next time, take care and be blessed. Peace.